there's a management philosophy out there called Scale Architect, and they go through the multiple phases of the first phase is early struggle. Then you go through the fun phase where kind of fast scaling, but eventually you hit white waters. And white waters is when you need, in our words, would be a vested management team with a really good process and technology in there. And after white waters is predictable success. And that's really the destination that you want to stay in. After predictable success, there is a decline, and this is kind of the natural cycle of companies. And in order to stay out of the decline, there's a lot of things that they talk about, but I'll just focus on people who have hit the white waters in the painting industry, and they know what that feels like.
Welcome to the Painter Growth Podcast, where we help you scale your painting company in record time. Join us as we explore sales, marketing, hiring, finances, leadership, and more, everything that you need to know to scale and grow your painting business. I hope you enjoy and subscribe.
What's up, everyone? Michael Hickman here, founder of paintergrowth.com, and you're listening to a very exciting episode of the Painter Growth Podcast, one I've been looking forward to for a really long time. I am joined today by the CEO of Aleph Holdings. And you guys know Aleph Holdings, Jason Paris, Hoken, Micah, all those guys. But we have Mr. Chet Funk. What's up, Chet?
Here we are. Man, great to be here. Thanks for inviting me on.
Yeah, it's been a journey to get you, but
here I am.
There we go.
You got me.
So, you were telling me before we got on, just as like a broad overview of what Aleph does. You have kind of three arms, right? What are all the things that Aleph does?
Yeah, all of it. We technically have three legal entities. So we have a holdings arm, which is primarily our Twin Cities brands and mostly under the Paris flagship. We also have been building and developing an internal software. So that sits in the holding arm, and we have bought and sold a couple other companies through that entity over the last handful of years, but have really narrowed our focus on the Paris and the software side of it. We have a capital arm that most of us have taken distributions out of the holdings profits and put it into Aleph Capital. And a big focus for that has been multifamily real estate development. So taking both some of the team, the early crews that we've worked with in the capital, and converting that into an alternative asset. So multifamily is a big favorite of ours, and that's definitely been a focus. And then those two together on Aleph Ventures, which has been our venturing arm, for lack of a better term, and we have been taking usually a minority position in other painting contracting companies around North America. We have one partner in Canada as well up there, hopefully more someday. But yeah, we have been active in deal formation on that, and we've done about 22 deals over the last 3-ish years. And that's it, us in a nutshell, I suppose.
That's a good deal rate. 22 in 3 years. That's busy.
Yeah, it's busy for sure. Obviously, first 18 months of doing it, you learn a lot of lessons too on how to do them. What's a win for both parties? What can we promise, and what can we continue to grow in, and what actually makes these things not just scale and grow in revenue, but what makes them profitable. And we've got all the war stories of the good, the bad, and not really the ugly, but the challenging for sure.
The learning opportunities.
Yeah. Yeah, Jason and I used to always say that at the end of the year, we probably for the first 3 years of running Paris Painting, we'd get to the end of the year and be like, man, imagine how much money we could have made this year if we would have just done that different. Yeah.
So you've, I guess why, just when you went through those things that you guys do, it made me realize that we could be here for about 3 hours and not even scratch the surface. But let's start with some of the big things. So why do you guys choose to invest a minority instead of a majority stake?
Great question. I think some of it just really boils down to it's an alternative, and it is an awkward deal structure when most people just say that, hey, that typical private equity is coming in and they would take usually at least an 80%, if not 100% share, and maybe you roll something into private equity. I I don't think that model translates incredibly well into the painting industry. A lot of these are smaller deals in the grand scheme of things, and it still requires a managing member. And a lot of us are based in the Twin Cities. As Aleph Ventures continues to grow, obviously our staff is growing, and it is across the nation as well. But I think that local and present ownership, you can't beat that. And as a lot of us grew up in the franchising background, it's not a knock on franchising by any means. Franchising has done an incredible job of moving people out of employment to self-employment. Statistically, it is challenged to move people from self-employment to true business ownership. So when we really looked at what's the path forward as Paris painting began to stabilize, and you start looking out, well, what do we want to do? Do we want to go out and open new markets? Do you want to go buy other companies and just roll them in and convert them into Paris paintings? Or do you want to try to license or franchise this business model and keep scaling across? And ultimately, it's unconventional for sure in the trades. It's not that unconventional in some other industries. And I've really liked that model of I'm not afraid not to control something. And I think sometimes when you really talk about a minority, it really is most people would translate into, well, you don't control it. And what happens if that guy really screws you over there? And I think at the end of the day, maybe it's just our perspective. I think control often is too much of an illusion. And it often is for good deals, it could wreck a really, really good deal of I don't need to control, but I do want to influence. And just in case you think I'm tricking you, we'll come in. I'll be a minority as Aleph, and for avoidance of doubt, we'll set this up as a joint venture that is manager managed, and you're the manager. So I don't even have a voting right here, but I hope you want to hear what we have to offer. Otherwise, we shouldn't be good partners, right? There'd be no point in doing this. So,
the good faith has to be there.
Good faith has to be there. I think sitting in our seat, being the investor, so to speak, the minority sell, it is hard. I would just tell you that at times, but it is incredibly rewarding for the partners that it makes sense for. Of hey, we're really here to put gas on something really good that you've started, but you plus us could equal more than the individual components, and it takes a lot of the fear factor away of doing a deal. Well, what if you guys get in here and you start really messing things up, and now I've given you my company and I'm screwed. I'm along for the ride. It's a lot. I would just say it's a lot easier of a deal formation when you just go first and say, hey, you could really screw me and you could really take me for a ride, right?
Yeah.
And I'm willing to do it because I get to know you. And I think these are built on trust and influence anyway, more than legal control. If we're really just going to who controls it, well, then we're kind of starting on a foundation. That's not a bad foundation if you're investing in real estate. I invest in real estate too, because it's a pretty straightforward asset, right? But a painting company is a culture and organism and a lot of people. And if we're already wondering who's controlling this thing from the day one, we're kind of off to a bad foot.
Mm-hmm. Yeah, I've heard that doing you really want it to be clear in owner or minor or major stake. You don't want to do a 50-50 ever.
I did 50-50 with Jason from an ownership perspective or from a voting right perspective.
I guess in a roll-up type scenario, right? Because it's like more of like operating from afar.
Well, I would also just say we're not doing a roll-up scenario too. So some people hear about what Aleph's up to, and I would just say, if you wanted to do a roll-up, we're doing a really bad job because we have non-controlling interest in voting shares in a bunch of these. And what Aleph is not doing is going out and buying companies at a 3x, trying to roll the revenues all the way up to the point where we can turn around and sell it at a 5 to 7x. And one, I would just say the painting industry is not probably a great industry to try to do a roll up. One, because they're not worth a lot of money from an equity perspective. But there is an inverse to that of if you know how to stabilize painting companies, the inverse is, the equity might trade at a 2 to 4x, and it doesn't really matter how big you get. Maybe you get to a 5. Holy cow, that would be a wild painting company. But the market doesn't really value the equity of this industry. The cash flow is incredible. That's the inverse, right? If you could do it yourself and stabilize them, why would you want to turn around and sell it? So that's really our play in this it's got to be bigger than just painting companies too, but it is, yeah, let's take investments in awesome entrepreneurs, great legacies. Let's help them scale and stabilize. And for us, that benchmark is typically at about 7 billion in revenue. You can start to really stabilize a painting company. Hopefully there's growth way beyond that. And many of our partners want to keep following kind of the Paris painting trajectory. But at that stage, a lot of these partners of ours, it's kind of, all right, you helped me really move from self-employment to business ownership. Now it's a really fun stage is let's move to investors together. And how do we keep growing shareholder equity and taking these stabilized assets that we've all grown and converted them to an asset and roll that into, we've got an awesome team. We've got capital that's coming out. These are really they're not cash intensive businesses. So if you make some money, it's not like the business is going to consume it next year. You can only buy so many sprayers, right? You don't reinvest a lot of them. So where are you going to put the money to work, right? And for us, that's always been other small business equities and multifamily real estate, kind of the classic rich dad, poor dad.
Yep. Okay. That's awesome. I mean, yeah, I guess, you can definitely generate a lot of cash flow through painting businesses. I guess where that, potential arbitrage comes if you did want to do a roll up is if you could make it stand out somehow, right? If you did have a differentiator and you could show that, you have a bunch of painting businesses across the country that are not reliant on the boots on the ground owner.
Yeah, you could. And I'm not saying it's a horrible idea. It's
just not your model.
Yeah, I would just tell you, I've talked to a lot of painting owners, and if you were in the HVAC industry, the plumbing industry, the roofing industry, even a licensed trades or something that has that backing, you just got to think about your exit on that, right? There is a pretty large buying pool of private equity and venture capitalists that are salivating over those types of portfolios, and those guys are, they have been handsomely rewarded for doing that. That has not that's not really been the case in our industry, and I think a lot of people would say, "Oh, that's a big bummer." Well, then what's the point, right? Why would I do all that? Now, the flip side of it, the cash flow and the stabilized asset of these things they're pretty meaningful, and in many ways, because they aren't heavily traded, right? The cash flow of a roofing company or painting or an electric company or an HVAC, they're pretty cash intensive to scale those things, and a lot of times, and that's what the equities are worth a lot, right? There's a demand for them, so I think what you're seeing in those industries, at least in the markets that we're all in, every other billboard is for one of those people. The marketing budgets are pushing into the 20+% range, and it's very expensive to continue to scale those businesses. And that's typically the only way to realize that equity that you put in there is through a future exit, right? And it's a different mentality, I would just say, and that might change in the painting industry. I just and there's always buyers, right? And maybe someday we'll be that buyer. If somebody goes and does a big roll up that's super impressive, then I would love to see it, and maybe I'd be a buyer.
Yeah. So what when it comes to identifying owners, what are some of the green flags and red flags that you've seen when you've had a deal come across your desk?
Yeah, there's lots of individual characteristics, and I would say no probably big surprising statistic that I could give you there. I would say, as we've done this for a few years, this is also through the lens of where is Aleph good. So it's not that there's not a right or wrong or good or bad, and sometimes I always have to preface that because I have opinions, but doesn't mean that I'm not making judgments necessarily when I say this. But for us, we've really started to focus in. There's a management philosophy out there called Scale Architect, and they go through the multiple phases of the first phase is early struggle. Then you go through the fun phase where kind of fast scaling, but eventually you hit white waters. And whitewaters is when you need, in our words, would be a vested management team with a really good process and technology in there. And after whitewaters is predictable success. And that's really the destination that you want to stay in. After predictable success, there is a decline, and this is kind of the natural cycle of companies. And in order to stay out of the decline, there's a lot of things that they talk about, but I'll just focus on people who have hit the whitewaters in the painting industry, and they know what that feels like. I know what it feels like to try to train and develop an integrator who is going to lead a VP of sales and marketing and somebody who's overseeing the operations and coordination. And I understand all the technology investments that I need to put into this thing. I understand I need a formalized training process with an LMS and onboarding in order for this thing to be predictable. And I know the inputs that are going to go into this and the outputs. I would tell you the painting industry is filled with a lot of like really cool stories, fast growing entrepreneurs. And this is where I got to be careful in the sense that I'm not like discouraging this. There is a great business model out there in the painting industry to be like a solopreneur, go really lean and lightweight and maximize the cash out of that. There's nothing wrong with that, right? That would be very different. That would be like a really fun way to grow a business, but it's not necessarily predictable because when you leave as the owner or a couple core employees leave as an owner, the business itself doesn't have the domain expertise to keep going without one or a couple people's individual input on there. There's nothing wrong with that, but that's really for us. It's like, yeah, if you know that you've hit the whitewater of truly professionalizing a management team, and for us, we would also go as far as saying these roles should be vested in the success of the company in some form or fashion. So for a lot of at the Paris Painting and at the Aleph level, everybody that runs each of those core divisions, they're equity owners. And I want them equity owners in it. And I think you just kind of zoom out, and that's how most business happens in America and in North America. There are no Fortune 500 companies that everybody has stock options there, right? Or we'll just use Sherwin-Williams. Everybody knows Sherwin in this industry. Everybody that sells paint for Sherwin-Williams has stock options in it, and they are vested in it. Now, that's kind of hard to go down to that level in the painting industry. I acknowledge that. But I believe in a vested management team and choosing how to bring in those people is a really big part of the equation to get to predictable success.
And are you talking about on the parent company side or on the individual painting companies as well?
Well, that's kind of our, I would just say, niche in the offering is a deal with Aleph brings all of that vested management team. So we often sit as a COO, a fractional integrator. We'll oversee and we'll train all the salespeople. We oversee all the marketing. We typically are training all of the production people. We are training and doing sometimes fractional coordination in these businesses. We often close out the books and run the finances, and it's our software that we've been developing. All of those people that work at Aleph doing that are vested in this thing. One partnership with Aleph and your partner and your business, now you have all those core roles who are vested now in the success of your company. So it's not saying that nobody else should be locally, but we are like checking off a lot of the boxes, saying these are a lot of core roles that should have a really meaningful stake. And like, I want this thing to grow, not just the top line, not just my income, but I want the equity to grow on this, and I want the profitability to grow on this thing.
For sure. Now, as the investor, when you offer those additional types of services, is that just kind of like an expectation based on ownership, or is there other like consulting fees that you're able to negotiate as well?
Yeah, that's a great principle. I would just say investment is equity, time, energy is compensation. So one big trap that we've often seen in partnerships where they can go wrong is these two parties enter into a 50-50 agreement or whatever it is, a 60-40 agreement, but they pay themselves the same. And one guy's leading the company. He sold all 2.5 million of it, and he kind of does a little bit of the coordination on it. And the other guy does the books and helps out with some of the
Yeah.
helps out with some of the production or whatever it is. But they pay themselves the same, and that is a recipe for a lot of resentment. So I would just say one of the first things we do if we make an investment is, and it's not uncommon just for a tax strategy. I understand why people don't choose to pay themselves a market wage, and they're taking it through distributions. And I'm not advocating it. You should do as many things legally, I would say, that you can to do a wise tax strategy. That's great, but the value of your time and energy, whether you are the visionary of this business, whatever you're selling the company, if you're taking leadership positions, you're running a production management, we pay all of the managing members market wages for that. And the same thing for Aleph, from our perspective, it's if we are going to hire and place roles in here, we're going to pay them market wage and whatever they're doing in that industry. So market wages is a big part of uh, our ethos and our culture. And a lot of that just gets into I don't want to sweep anything under the rug. If the business isn't performing, and the only reason why we're making the profit points we want is because we're not paying people market wages. Well, now we're just hiding issues, and I'd
It's like
rather
when the
address
owner
them.
doesn't take a salary and now they have a 20% net profit.
Yeah, I hear
But the
that all the
owner's
time.
not taking a real salary. That's not, it's not honest.
It's honest to a business broker who sells your company on an SD, seller discretionary earnings. And I
Yeah.
love that. It's kind of like, well, none of that's discretionary to me. It's we're going to pay somebody to do it, and nobody does that stuff for free, right?
Yeah, that makes a lot of sense. Now, doing what you guys have done in the painting industry is very impressive. There's not a lot. At least I don't know a lot of other companies that are doing what you guys are doing, and I feel like you've put together a rock star team to be able to do it. What are some of the early challenges that you guys ran into, when you were trying to figure out your own path here and do your first few investments in painting businesses?
Yeah. Oh, a little trip down memory lane there. I
Way
I
back
would
3 years.
say, yeah, no, yeah. I think probably it's hard to even say that we were surprised. I think some of it you go into uninformed optimism, or it's just where you're at in that season of what you can actually perform on. But I think early on the hope was, yeah, let's do some quarterly meetings, let's do some books, let's place the technology. I would just say a little bit more light touch, and maybe we'll join an L10 and get involved in it. As we got into this and got a couple of years into it, it's kind of like it's not light touch at all. It's the more engagement that you can provide, the better. And so I would just say probably the biggest learning for us has been, yeah, building fractional COOs and integrators, building out a market division right now that can help with the boots on the ground. And we work with great people like yourself as well. And our businesses do a lot of things, but it's just creating that domain expertise that we're leveraging across all companies. That it's a heavy lift for sure. I'll just maybe put it that way. There's a lot of humans that get involved, and I think just the farce probably in all venture capital or private equity, particularly in the trades industry, is that you could do it light touch. That it just needs money, or it just needs some direction or leadership, and it's like it just never seems to be the real answer.
Mm-hmm.
It's always more lean in. It's always more work than you want to admit up front. But it doesn't mean it's not worth it.
We've worked with a lot of painters, and we've realized that no matter how bought in someone is and how excited someone is about their own company, if we leave them to their own devices, they will lose steam.
Yeah,
So
and I would just say
we believe in that as well. A lot of high touch, a lot of one-on-one.
I would go back to Paris Painting's growth story too. If Jason and I were left to our own devices, it would not be a good company. I don't. It would be like, here's two guys that I a little bit more on the visionary end. Jason is probably a better integrator, but he's a lot more of a strategist and technologist. Like he was really geeking out about writing Wology code and macros and right. So you put those two ends of the spectrum. It's like, well, who's going to develop an integrator? Who's going to like go train a sales team? Who's going to do this stuff, right? And I'm not a good coach. Neither are you, Jason. And we both acknowledge that. It's like, oh, jeepers, it's going to take a lot more integration and a lot more human talent here. Who's going to develop the people that are here? And I would say it's fair to acknowledge the people that typically are starting a business that have that ambition, that have that vision. They're not often the same human that would develop a team. And that's not like a knock on anybody. That's me, right? I am much more on the bent of let's go start something, let's go sell. I can kind of find my own way in a sales and a marketing room. I can find my way around financial statements and I can convince people to do things. But when it comes time to really transferring skill, coaching, developing, and following the process, that was neither one of us. And I think that's pretty common in small business owners. Most partners that I would just say almost universally, the partners that we've partnered with, they are on the visionary or more sales spectrum of things. And you don't need any more information. Visionaries don't need any more information. I don't need more ideas. I don't even need more answers. Most of them know the answer. I knew the answer because you came from college. I knew exactly what the answer was. I just didn't have it in me to integrate it. And as much as I would want to
implement and do the things.
Yeah. And that's the role of a partner. That's like the match made in heaven for most small business owners is who are the doers? Who are going to be the integrators that you can bring on and who's really, really skilled and talented at that? And that probably, if there's a secret sauce so far, if you want to call it that, that's been the niche for Aleph and has been some maybe early luck for sure, bringing Alex on, bringing Micah on. Mark became one of the best integrators I've seen, and that was just kind of a luck of the draw, homegrown one for sure. But also now recruiting. We have a team of 4 others, and Dave is leading them. Dave Richley, who used to be the president of College Pro, and just awesome integrators, awesome integrator minds. And I would just say even the people who are running each of these divisions have great integration mindsets.
Yeah, and so your integrators, it sounds like each one of your integrators will be kind of dedicated to a certain number of partner brands.
Yep, and some of it is based on need. So here's probably the spectrum. There are some partners of ours that have now. They've got to a revenue scale that we can afford a full-time local integrator, which is the destination. We always want that. And now they're part of kind of a cohort, and they're going through their own certifications on L10s or GAM meetings, goal alignment meetings, or performance management, priority management, conflict management. They're getting certified in all the skill sets that are needed to be a healthy and enduring one. The step before that is some form of a fractional integration. The business isn't quite ready to hire for a variety of reasons. Maybe it's a revenue perspective, or we just haven't found the right talent. And our team will step in and they'll play that on a fractional basis. And that might be for a small company, it might only need a handful of hours a week to really run. Because there's only a sales guy and a production manager, right? There's not a big team where there's not too many games to be doing, right? But I'll lead the L10s. I'll do all the performance management. I'll come out once a quarter. We'll do field visits. We'll get them up to Minnesota to do training. And that's a big lift to get that off of the plate because, frankly, a visionary isn't skilled at it. So a lot of times people are just burning through sales guys and production managers or coordination teams because they're just bad coaches. And I would put myself in that category. If that was me, if we tried to do that through Paris, we would have burned through a lot of people, right? Because it's just like you're not setting them up for success and putting them to the full coaching. So yeah, that's us. We'll do it in a phased approach.
So one big mistake you made early on, realizing that it's not light touch. With their own
get on a plane and you're going to go shoulder to shoulder as much as possible.
Yeah.
We're going to run meetings. You got to take things off the plate. Is really, you can't tell a small business owner what to do. They they know, right? It's like, yeah, I know that person needs coaching and development. It's like, who's going to do it? Not me. Do you guys have resources that can do that? I get it. We need it.
Yep. Yeah. Priority management, and not just telling them how to manage their time, but being right there beside them, doing it with them.
Taking it off. Like, no, I'm going to take this off your plate. And this is no longer going to be a part of your scope of leadership or work in your business.
That's awesome. So light touch, what's another learning experience that you had early on?
I would go back to, learning experience, or when you just get started in something like this, it's, how to explain what whitewater is and how hard it is to get through whitewater. And they call it, and I'm going back to that scale architect, that diagram for them. It's fun for a reason, right? And it's fun to run a $3 million painting company, and you're the guy, and there's like two other people that are kind of meaningfully reporting to you, but the systems are there, and you're really involved in the company, and everybody else is kind of doing what you say. That can be really, really fun. That's really different than building out a vested management team, and you're like not really the guy anymore. There's a whole management team that have emotions and opinions, and they need development, they need coaching, they need vision casting. You can't just do what you feel like and what you want anymore, but it's for the best of your shares. And it really is that mindset of, I'm going back to, what is our learning? It's kind of like, I think we've done a lot better job now explaining, and when we've grown to learn that too, um, the difference of, do you want a lifestyle business that's really fun? Because there's nothing wrong with that. And you can grow a pretty big one too. And we've seen some really big ones. And really big is relative, but whatever it is, plus or minus $15 million companies that you'd be kind of shocked. It's like, holy cow, this is still just coming around you. And that's like really impressive, pretty scary as an investor, and something like that. It would be a big culture shock if we started moving into a vested management team.
Mm-hmm.
And
What
that's
level do you, I guess, two questions then, like, how do you identify if you feel like a potential partner has what it takes to do a $3 million business versus a $10 million business? Like, is there a way for them to like pre-demonstrate leadership capabilities at that time? Or is it gut feel kind of?
it's I mean, it's not all just gut. Hopefully you're meeting them, um, when they are 3 to 5 million. I would just start by saying that's typically now who we're meeting, and they're just hitting that whitewater right now. So it's more of, what you've built is really impressive, and kudos to you. In order to get this thing from an awesome lifestyle business, which is really beneficial for you, into a predictable success and an enduring asset that no longer takes your time, energy, or leadership, this is the pain that we're all going to experience together, right? Do you want to go through that pain or not? And it really honestly comes down to decision. We've met people, and it's like, dude, if I were you, I'm not sure I would do it. This is like a pretty good gig that you got here, and you should just invest in real estate, unless you want this to become an asset, instead of just an income stream in your life. And for me, that was an easy decision because I didn't have an awesome lifestyle business. We started with that foundation and that look at Paris painting. So I would say I don't really, I don't know if it's like, I pre-qualified you in it. I think a lot of it is, have we really laid out the differences between these two paths, and are you sure you want to go down this? Because it's a good brand, you got good marketing momentum. I can pre-qualify all those things. I can meet your team and your leaders, and I can see they're humble, they're hungry, they want to grow. And that's kind of all you can do in our seat. The rest of it really comes down to, I don't want you to be surprised that this is going to be uncomfortable for the next season. Right? It's going to be different than what you've been doing, but this is the vision. And if you want something that's durable, I don't know a different way, and maybe you could tell me a different way, but this is the way that we know, and this is what I could offer you as a partner.
Yeah.
And I don't think it's like a far-fetched idea. It's just like, this is how most businesses become durable. They get vested management teams with really good process and software and a really good personnel development that's coming in here.
What would you say is the benchmark for getting out of the whitewater?
Like a revenue standpoint, you say? Or
I was thinking more like a team and operational efficiency standpoint.
sure.
Like you have these are the positions, and this is the operational.
5 names and 5 seats is kind of a great starting point. So, can you just be a visionary in this? Do you have a full-time integrator? Do you have somebody overseeing sales and marketing? And ideally, maybe even somebody overseeing just marketing and a sales manager with the team. That's kind of the next layer. Do you have somebody overseeing production and coordination? We call it the core 3. So a sales role, production role, and a coordinator.
Yeah.
Those are kind of our building blocks in our model. So, but if you go back to the traction model, 5 names and 5 seats, who's overseeing the sales and marketing, who's overseeing the production and coordination, who's overseeing the finance and admin. And I think that's the first litmus test. And doing that with market wages that could attract a replacement, that's maybe one benchmark of a litmus test of, if somebody quit, could we replace them? Is this an appealing enough career and job and that you can make enough money to recruit the top talent that you need in that seat? That's probably when you've got through whitewaters, and now you have the opportunity to scale predictably, right? When you have those. Before that stage, you're still getting there, right? It's not that predictable of, if I am requiring a unique human being that is really, really challenging to recruit. And I don't know if anybody else would do that job the way that they do it. That's scary. That keeps me up at night as an investor in those.
And we've all had businesses where we've had that special person that is this unicorn doing a million things that you're going to die if that person leaves, right?
Yeah. Or
3.
Yeah, exactly. And it kind of just depends on, that's maybe okay. And I've seen small businesses milk it, right? And it's like, yeah, we're just going to stack cash as much as we can for the next 3 years until this ship doesn't sail anymore because that guy quits. And then I don't know what we'll do. We'll probably get to hire 3 or 4 people, I guess. And I don't actually know what they're doing because they hold all the intuition on my business, and it's in manila folders and whatever they're doing over there, right?
Makes sense. So do you feel like that's around like the $5 million mark to be able to afford that team?
Yeah. We usually say 3 million is the starting line. 5 million is when it starts to become comfortable. 7 million is when it comes pretty stable.
Mm-hmm. Nice. Those are good benchmarks.
Yeah. Yeah. It doesn't quite all fit at 3. It starts to fit pretty nicely at 5. And this is, I would also say, relative to your industry. I would just call it, we're heavily invested in residential repaints. So this is also assuming margins that are fairly healthy. If you're running a commercial or new construction business, those numbers will probably have to be sizably larger.
Mm-hmm. Yep. Yeah, you need that 50% gross profit.
Yeah.
You do. So you're expanding into Canada now. That's exciting.
Yeah. Yeah. That was another learning curve. It's amazing.
Yeah. I was gonna say, what type of learning do you have doing business across borders?
Some of it we learned even just state to state. There are enough nuances, the way that taxes are handled. But yeah, you get into different currencies and metrics, and I think a lot of our
reporting.
Yep. The laws, right? How you pay people, the insurance that's coming out of the payroll taxes that are happening there. Everything's different to some degree, and it's just it becomes a lot of change management. Dreamscape is the partner there. Those guys are like the coolest guys that you could ever partner with, and they've been super patient with it. But yeah, I think
what city are they in?
They're just outside of outside of Vancouver.
Okay.
Yeah.
Good market.
great market. Yeah, a beautiful market. So excited about it for sure. Definitely dipped our toe into it, and it's you have to kind of start a whole new entity to be in Canada as well. So in many ways, was a new startup. In many ways, I mean, you help a lot of people in America. It's very similar. We live in Minnesota too, so Canada is not that much crazier than Minnesota.
Yeah.
Very similar cultures.
The not a big culture shock, more of a legal and paperwork shock.
Yep. And those Canadian dollars are not like the American dollars, That's that's different.
Yeah, they definitely don't go as far these days.
Son of a gun. What are you guys gonna do about that?
I don't know.
Yeah.
I have no idea. So I mean, looking forward in like the next 5 years for Aleph, like where do you see the organization going?
There's probably, different futures for each one of those entities that I talked about. So, Mike has got a lot of passion and vision for the Twin Cities, and I am all on board for it. So I think the Paris ecosystem has a long trajectory of growth that it has ability to do, and we have gotten a little bit into more than just painting in the Twin Cities, and we'll probably look at a couple of just local acquisitions as well that can go into the Paris family. So most of it would be still exterior home services. That's a niche for us, but yeah, I could see that growing quite meaningfully. For the ventures arm of things, we have pretty specific goals, and in this business, it's different when you're a minority owner, and it is kind of a race to about $100 million of partner revenue that we're chasing after. So we're about halfway there, and hopefully further than that. We'll see how this year pans out. But after a few years, and it's a little bit different. You can grow there a little bit quicker than obviously doing it yourself. So that is a focus for the next couple of years to get to that mark. At that level, the ecosystem stabilizes pretty nicely, and for all partners, not just for Aleph Ventures. We're able to attract, retain, and hire some really awesome talent for the portfolio that all of us get to leverage. And that's good for Paris. It's good for everybody. And
Yeah.
so that's frankly getting there is probably not a 5 year vision. I hope it doesn't take 5 years, but if it does, we'll all be happy still. But I think at that stage, it's going to be a lot more dictated by the next layer of management. How far do you guys really want to go? And how many new friends do we want to make? Right. And there is value of slowing down, and a lot of us are still having kids. So you never want this thing to outpace your lifestyle. But yeah, that's a clear benchmark. And then the capital arm is, we've already seen it happening, but it's super fun when some of our partners begin to invest alongside of us.
Having some of your partners invest alongside you?
Yeah, I think the long-term durability of Aleph Ventures is going to be how many people can we help move from business owner to investor seat? And it's really fun to do it with your friends. And I would just say, yeah, what I say to people, it's like, if you want to invest in Minneapolis and you're looking at a piece of real estate or a business here, just give me a call. Right? I would love to give you 2 cents for it or come along for the ride with you. I would like to invest in a lot of other places too, and I just don't know the markets, but my partners do. So at some point in this ecosystem, cash is not really ever the issue on good deals. It's just who can source and procure really good investment deals. And that's been fun, man. We've got a couple partners that are looking at their first acquisitions right now, and some have done some real estate with us and without us too, obviously. But it's just really fun to watch people move, from self-employment to business ownership. But once they start to be able to sit kind of in that visionary seat,
yeah,
and become an investor, that's a sweet spot. And I think a lot of people could do that for a long time. And it's fun just to be a small part of their journey getting there and doing it alongside of them. That definitely gets us jazzed for sure. So I don't know. It's at some stage, it's like, when do you stop doing that? I think we do it for a long time. And
yeah,
I could say a lot of big numbers to you of what I think it could be, but I think at the end of the day, that's going to be probably more dictated by not me and what's the team ready for. What do they want to take on?
When did you you were first. Did Jason hire you to work at Paris Paintings, or did you come on at Aleph?
Jason and I, yeah, small story, small world. So I think I told you this. Jason and I go way back. So he was actually my very first hire at Paris, or at College Pro Painters when we were freshmen at the University of Minnesota, and then stayed friends. We were roommates. I went off to the business world. He went into corporate America, and we both said, "Thank God we went to business school. That painting thing sucks, and I can't wait to be done with it." And lo and behold, right, for a variety of reasons, Jason got back into the painting industry, and I just helped him as a friend. And then at the end of 2016, we made a deal. So I bought what was effectively half of Paris Painting. At that stage, I left my gig and then transferred after Q1 of 2017 full time. And he and I were just shoulder to shoulder, building metal walls and trying to figure out the painting industry. And it was the right time at right place, right? 2017 in the trades. We had a nice tailwind for sure for the first 3 or 4 years there. And then COVID obviously was like supercharged. So
yeah, they say people overestimate what they can do in 3 years and underestimate what they can do in 10 years.
Yep.
Pretty crazy what you guys have done in 10 years. You think that back, when you're starting Paris Painting, the paintbrush,
a couple more years to get to 10 years.
I'm sorry?
I got a couple more years before it's 10 years, but yeah.
Yeah, exactly. Right. 8 years. And from a paintbrush and a dream to having a $50 million plus empire. It's pretty cool.
Well, I wouldn't call it an empire, but
some would call it an empire.
No, it's I don't know, especially when you invest in companies, right? It's sometimes like you meet the finance guys and they're like, I've got $2 billion under management. It's kind of, well, what does that actually mean to you?
Yeah.
And it's
sorry about the camera.
You're good.
Yeah, regardless, Chet, what you guys have done, is very impressive, and love what you guys are doing for the painting industry as a whole. You guys aren't just helping invest in other companies, but you're sharing information freely and supporting those who aren't able to be partners. So yeah, appreciate all you guys are doing, man. And hope to come hang out with you guys this summer.
Anytime, man. Summer's a good time to come here.
I get it. I'm going to, hopefully come down this summer for a few days or maybe a week and come play some Smash Bros.
Come on, man. As long as I can be Samus.
Sounds good.
Then we'll be good.
All right. Done.
Well, I appreciate you.
Thanks for coming on, man.
Thanks for listening to the Painter Growth Podcast. If you want to grow your painting business, go to www.paintergrowth.com or click on the top link in the description. Talk soon.